Hello everyone, welcome back to my channel. So this marks the start of week number 10 of this road to 200k challenge. We finally got into double digits in terms of weeks in this challenge. The way things are going, we're still gonna take a bit longer to get to our 200k goal, but we'll go step by step. Now, for the time being, I've already input the trades for today, and I'm going to explain the rationale for each and every one of them. You may notice that there is still a red dot in here, which means that I still have one trade open, and this is the one that is open. Basically, I'm trying to rebuy or buy back the puts that I sold on Lyft last week, and the ones that will expire this week, and those you can see it right here. And why is that? Because they are very close to being traded at 1 cent for the ask, which is the price at which we can buy back or buy this option. All right, and so if this falls down to 1, I'm going to buy it back and roll over the call, sell more of another 5 calls with not maturity for this week, or for the end of this week, of course, but for the end of the next week. And why is that? Because currently the price is at 12.81, as you can see right here, and since the option is trading very close to 1 cent, that means that the market does not expect almost certainty that the price of the stock at the end of the week will reach this particular strike right here, the $14.50. And so, because it is so unlikely, it doesn't really it's not really worth it to wait until the end of the week so that the option expires worthless, and we basically pocket the premium and nothing happens. I might as well, since we are 4 days away from the end of this week, I might as well buy it back at 1 cent and roll over the maturity. That way I get more premium sooner, and we keep, of course, our commitment for the following week in terms of trying to sell the Lyft stock at 14.5, and of course at least breaking even on the price. But now, and moving on to the other trades, as you can see, there are several trades that we have input. Those are signed with a blue dot, as you can see. And the main thing is that the main message here is that since I had close to $60,000 in buying power for this week, because I sold the remaining of my HIMS stock last week, I decided to be a little bit more forceful when it comes to the puts that I sell on the stocks that I want to get rid of. In this case, American Airlines, Ford Motor Company, and Lyft. And when I say more forceful, I mean I'm going to sell puts to try to lower the average price, as always, as I mentioned before. But at this time, I'm not going to set the strike price that far out relative to the current stock price. I'm going to, and that's what I did. I sold puts a little bit closer to the stock price, to the current stock price, because I want really to be able to buy these more shares of this stock, and for several reasons. Not only I had the buying power, but I also want to get rid of this stock, because these are stocks which are a little bit more speculative. They don't have that much value. The business is either speculative or it does not have any particular prospects for growth, and there is another thing which is related to the current time of the year. Currently, today it's September the 30th, and the earning season for the third quarter is coming soon, and so I would really like to have already get rid of these stocks before they present their results. And why is that? Because when results come, usually the stock have much more volatility, and if there is anything that investors may not like in terms of the guidance of the earnings, in terms of the performance of the company over the last quarter, anything that may shake the investors' confidence, the stock crash down again, and then I'm going to be forced to try to lower the average price even further to try to get rid of them without realizing a capital loss. And so that is why I'm trying to be a little bit bolder in that regard. And for example, as you can see right here, in terms of the Lyft stock, the stock has been pretty consistent today. It has been trading at around 12.80, and so I decided to sell puts with a strike price of 12.50, which is pretty close, I would say, but still, this is something that, all right, if it happens, and if the strike equals, or if the stock price goes down to 12.5 or lower, I will be happy to buy the stock, because that would allow me to make a significant progress in terms of lowering the average cost, and to be able to then get rid of the shares. I decided in the case of Lyft to take a little bit of a laddered approach. What I mean is that I decided, instead of selling 10 puts, for example, on Lyft with a strike price of 12.5, I decided to sell only 5, and then sell another 5 with the strike price immediately lower. That means that if the stock price ends up going down in a big way, and instead of buying, in this case with 10 contracts, it would be 1,000 shares at 12.5, I would buy 500 of them only at 12.5 and another 500 at 12. This, in this case, if it only goes down below 12.5, I will buy these 500 and still have another more buying power remaining to next week buy more, try to buy more shares at 12.5 or something lower at 12. So this gives me a little bit more control over the price that I can buy the stock. And so this is a much better arrangement for me to try to lower the average price even further. And so that's why I decided to take this approach with Lyft. In terms of Ford Motor Company, I decided to sell 5 puts with a strike of 10.5. You can see this is particularly close to the current stock price, but because this is something that I really want to get rid of. And not only that, the $10 strike put was trading at almost zero in terms of premium, because of it is extremely unlikely that it will ever reach this price over the course of this current week. And so I decided, all right, it doesn't matter, let's go for the 10.5, because if it is assigned, it's going to allow me to lower the average price in a significant way, and that's exactly what we want. In terms of American stock, the American Airlines stock, it is exactly the same reasoning as the Ford Motor Company. I decided to sell the $11 put. The 10.5 was trading at almost zero premium, and so it was not really worthwhile to go for it. And so because of that, I decided to pile up basically on puts with a strike price of 11. And why did I sold 15? Well, it's basically because it was trading at a very, very good premium. Given the distance, the relative distance it is between the stock price and the strike of the put, the premium was very good, and so I decided, all right, this is pretty much a good trade, and so let's pile up on stocks. I'm going to commit to buy 1,500 stocks on American Airlines, and so let's see what happens. Hopefully, if this happens, of course the strike, the average price will come down very significantly, and I will be able to, at the slightest jump in terms of price, to get rid of them, which will be, of course, a very good milestone for me, because I really want to get rid of this stock. As for the rest, I sold 2 puts on Estée Lauder. Now you may ask me, why did I do this? This is basically a short strangle, because as you can see, this is I sold a put and a call, and I already had sold a call. The put has a lower strike price. So basically, and just to show you, a short strangle is something like this. I already explained this in previous videos, but nonetheless, this is something that it's always interesting to watch. And so basically, this is a short strangle. This is the strike price of the call, which is, in this case, is 98. All right, and this is the strike of the put, 97. Right, and so basically the profit is maximized when the share price remains between 97 and 98 in this area right here. However, the stock currently is trading at around 100, so we are more or less in here, meaning we are going to have a loss, but a loss in terms of we could sell them in the open market at 100, and instead we are going to sell them at 98. All right, that's true, but for me it's not really an issue, because the 98 was the average acquisition price. I want to get rid of the stock because it's taking too much of my capital tied up in it, and so for me it's something that it really does not interest me to keep the stock, even though it's a high quality one, but still, yeah, I would rather get rid of them. And so, but even though the 97 put was trading at a pretty good premium and was quite profitable, and so I decided to go for it, since I already had the buying power left. And if the stock goes down, it allows me to lower a little bit more, by a small margin, granted, but still it allows me to lower the average acquisition price a little bit more, which is something that, yeah, I'm not really that much concerned about, since yeah, I would have to try to sell it at 98 anyway. So yeah, it's just really for the purpose of getting a good premium. And then the last one was basically also because I since I had some buying power left, I decided to go ahead and sell 3 puts on US Bancorp. Now keep in mind that this was a bit of a risky trade for me, but still I decided to go ahead, and the reason is that as you can see here in the screen of the stock, in the menu of the stock, if the platform cooperates with me, which is currently not happening. All right, it just did. As you can see right here, on October the 16th, there will be the earnings release. All right, and so I'm hoping that the stock does not get assigned to me and I'm not forced to buy it, because otherwise, yeah, I really want to get rid of it as soon as possible, because I don't want to keep the stock while the earnings get released. It results in a lot of volatility. You never know what's going to happen, if it's a stock going to crash down or going to shoot up or anything in between, and so it would be always better to avoid these types of stocks. But the stock is quite good, as you can see right here, and in terms of the ratings, the economic moat is also good. It has a fair value estimate which is still some way above the current stock price, so it is a good stock. It is a good quality stock, and so I don't mind keeping it, but I would rather stay away from it if some volatility event is upcoming, such as, for example, an earnings release. And so Nonetheless, and as you can see right here, the price of the put has come down, meaning the price of the stock has come up, and so I'm hopeful that it continued to go that way, and if it goes closer to 1 cent, I will just buy the put back and then use the collateral to do something else. But for the time being, it's going well, and so my bet is paying off. But in a nutshell, this is it. Let's just input now the trades into our scoreboard. Of course, we still have this trade, this order still open, and so it can be exercised at any moment. But for the time being, let's just input our trades into our scoreboard and just go from there. Let's start in alphabetical order, all right? And let's input first the American Airlines stock. So today, and just to keep this format going, today is the 30th of September, all right? This option rather, will reach maturity on October the 4th. The formula is still correct in here. So this is American Airlines. This is a cash covered put. And by the way, I forgot to say that I could not sell any calls on the stocks that I currently own. Meaning I could not sell any calls on American Airlines nor on Ford Motor Company, because they still are pretty far away from the current acquisition price, and so I would not be able I would not be able to sell a call with the strike price equal to my acquisition price. And so this is money that basically is tied up without yielding any return, and so this is something that I really want to avoid, because the only calls that are available are at a lower strike price, and that means that I would be committing myself to losing money on the trade, and so I would rather not trade than committing myself to losing money. And so yeah, this is something that needs to be addressed as soon as possible. All right, let's go and see what is the current premium. The premium was 8 cents that I received, and then as you can see right here, the commission was 38 cents and 76. So this is 106, it's 114. All right, so premium 8 cents, right, and the commission was 114. All right, now next up, and this is the same. Let's see what the others are. And so American Airlines is out of the way. The next up should be Estée Lauder, right? We sold 2 contracts with 40 cents, and we actually got a credit in terms of the transaction fees, which is always nice. I never get tired myself of saying this, because yeah, this is really good, not paying and instead receiving a credit. So the current strike is 97. This is a cash covered put, and this is Estée Lauder, right? The next one is one of our problem childs, or problem children, should I say, which is Ford Motor Company. This is a cash covered put. The strike price was 10.50, and I believe those were 5 contracts, if I'm not mistaken. Yes, it is. So 15 cents in premium and 2.28 in terms of commissions. So 2.28 and 15 cents. All right, this is it. Now I believe that all we have left for here, yeah, is still have the US Bank Corp, but for now let's input lift with the 5 contracts for the 12.5. Let's see what it is. Right, this is it. Lift lift cash covered put. So the strike price. Let's instead put the 5 contracts, and currently, let's see, how much was it? It was 7 cents and a fee of 153. So 7 cents and a fee 153. And now everything is the same with the exception of the strike price here, right? And I believe the premium was 18, if I'm not mistaken. 15. No, 19. Apologies. So 19 with a fee of 353. All right. So 353 and 19. Good. And I think all that is left is the US Bank Core with a cash covered put. Let's just copy this here. And the strike price, I believe it was 48, but let's see how much was it. 44, right? So it was 44, and those were 3 contracts, if I'm not mistaken. Those were 3, yes, with a premium of 26 cents and a commission of 137. So 26 cents, 137. All right, so this is it for now. Let's see how the trades pan out for the rest of the week, considering we still have these 2 covered calls on SLOD and on lift that we still have to also keep in mind. I'm pretty optimistic that the SLOD call will be assigned and I will be able to sell the shares. The lift call, for sure, it will not be exercised, and yeah, another week shall pass and we still keep our 500 shares on lift, but we'll see what happens. For the time being, this is all. Feel free to like the video and to subscribe to the channel. Also, leave your comments below. If you have any questions or suggestions, just drop me a comment or send me a message through LinkedIn. I would love to get the discussion up to you, and to be able to interact with you on this topic. And so, yeah, we'll reconvene on the next weekend to see how the trades pan out, and I'll see you there.